Thinking of contributing to the Supplementary Retirement Scheme to enjoy tax reliefs while building up another source of retirement savings? Here are some pros and cons for you to consider when making that decision. The number one advantage is an additional source of retirement savings. Most people underestimate their expenses during retirement. When every day is a holiday, you need to set aside a more realistic amount as your expenses every month. CPF is designed to provide a foundation for retirement. For those who wish to maintain a similar quality lifestyle as when they were working, then the CPF life payouts may not be sufficient to meet their desired needs. Hence, contributing to SRS is one way to supplement your retirement expenses. Benefit number 2, immediate and long-term tax savings. Tax reliefs are the most notable benefits of contributing to SRS. Singaporeans, PRs, and even foreigners are eligible to contribute to the scheme. The contributions are deducted from the taxable income, subject to a cap. For Singaporeans and PRs, the cap is set at $15,300. For foreigners, it is $35,700. When you withdraw your SRS money after the statutory retirement age, only 50% of the withdrawn amount is taxable. Tip: you can spread out your withdrawals and potentially pay zero tax. Read my blog for more details. You owe yourself to do the math before contributing to SRS. Benefit number 3, withdrawals are penalty-free upon reaching the statutory retirement age. As of 1st July 2022, the statutory retirement age has been raised to 63. Previously, it was 62. If you were to make a withdrawal before the statutory retirement age prevailing at your first contribution to SRS, 100% of the amount withdrawn is subject to tax, plus a 5% penalty. Withdrawing your SRS funds before the statutory retirement age is penalty-free under certain exceptional circumstances. Do read my blog for these scenarios. Benefit number 4, freedom to invest in a variety of instruments from low risk to high risk. A wide range of financial instruments are available for SRS investments. These include fixed deposits, stocks, bonds, Singapore government securities, Singapore savings bonds, ETFs, unit trusts, annuities, and single premium insurance products. Benefit number 5, investment returns are tax-free till you withdraw the money. Read more about the pointers that I've shared in my blog. Well then, what are the disadvantages of SRS? There are 4 disadvantages that you need to think about before funding your SRS account. One of the downsides of SRS is the withdrawal restrictions. Before you contribute to SRS, take time to review your cash flow, your net worth, and your financial commitments. Do you have the long-term time horizon for this, where you will not need to withdraw the money prematurely? Given the lock-in period, you should ensure that you have set aside enough for life's emergencies so that you do not rely on withdrawing from your SRS account prematurely. And also because this is meant to be held for long-term retirement purposes. And a thing to note is that you do not need to contribute the maximum amount on a yearly basis. Every amount that is comfortable counts. The second downside of SRS contributions is that it is non-refundable. The third disadvantage of SRS is its low interest rate. The interest rate of SRS accounts is fixed at 0.05% per annum. If you do not invest the funds, you are better off keeping it in cash and avoiding locking it up for decades. If you contribute $15,000 every year and keep it in cash, you will have $300,000 after 20 years. But if you were to invest the same amount at 5% per annum, you will gain $500,000+ after the same 20 years. And the fourth downside is this: the investment profits can be taxable at withdrawal. This is because the investment profits is treated as part of the SRS withdrawal. Keep in mind that 50% of the withdrawn amount is taxable, and this includes the profits from your investments. This does seem like a worse off tax treatment, as we do not pay taxes on capital gains and dividends or interests on financial investments. That being said, it still makes sense to contribute to SRS because of the tax advantages. Additionally, you can strategize your withdrawals over a 10-year period so that you potentially pay zero tax. Do read my other article, Is SRS Worth Your While?, to find out if SRS is indeed for you. If you wish to learn more about what you can do better in your retirement planning, you can find ways to reach me at www.karentang.sg. Have a wonderful week ahead.